Welcome to today's interview on the Smart Connector podcast. I've got a wonderful guest as ever, and this is Michael Roub. Welcome, Michael.
Hi, Jane. Hi, thanks for having me.
Michael's all the way over the other side of the US in Los Angeles. And how is it in LA right now?
It's early, a little early in the day, but sunny, and I think we're going to have a pretty warm day ahead of us. But it's exactly what people think of from California weather.
Ah, lovely, lovely, beautiful. I love California. My sister used to live there before she moved to Colorado, so it's one of my favorite places in the world. Yeah, so Michael, we're going to talk all about a very interesting topic today, which is startup to scale up, that transition, because on the podcast I have a lot of guests who talk about early stage entrepreneurship, but actually that moment when you can no longer say that you're a startup business, but you're actually in scale up mode is a very interesting transition. So I think we're going to focus on that. But before we do, I'd just like you to introduce yourself to our viewers and listeners and just tell them, where do you come from? What's your background and what qualifies you to talk about startup to scale up?
Yeah, I think fortunately thanks for the intro. I think I've had a couple of decades to figure out how I got to this point. I started off my career scholastically. I was undergraduate at the Wharton School of Business, and I then went into the world of investment banking for several years, where I advised companies from initial public offerings to capital raises to to mergers and acquisitions. I went back to business school, got my master's degree at the University of Chicago Booth School of Business, before I went back into the universe of investment banking, before heading up finance roles at a couple of companies. I then moved on to the healthcare sector, where I helped run the operations and build up a group of surgery centers here in California, which we later sold to another company. And then took on a couple of executive roles with two major healthcare corporations where I headed up acquisitions. So very focused on strategic growth and finding the right targets to grow the business in that level. So I've gone from the operations side of healthcare to the transactional side, but at the executive level. And then I went out on my own about 5 years ago and started working with a lot of businesses, small businesses, but by nature and my background, a lot of healthcare organizations who are looking to grow either by acquisition or just really to get more out of the existing business, finding the right strategic growth paths. So I've been doing that about 5-6 years. My group, Inflection 360, was formed really to take a holistic view at companies and then dive in very actively with the management team to find the right paths for growth.
Yeah, that's an amazing track record and background, Michael. And I think your wisdom and expertise is going to be so valuable. So before we actually get into this topic of moving from startup to scale up, let's just talk about the healthcare sector, because that's obviously a sector that you know really, really well. What is it that attracted you to the healthcare sector as a whole? And what is it that you think makes it an interesting and dynamic sector?
Well, interestingly enough, I didn't want to be in healthcare. So when I got into it 20 plus years ago, but I'd been part of the famed internet tech bubble bursting. I was a VP of finance for a software company in the San Francisco Bay Area. And when the market changed and our business suddenly went from a superstar to a out of business company, I started reaching out to a lot of colleagues, and the opportunity presented to get involved with this group of surgery centers through a colleague. And I never wanted to be in healthcare, and I never wanted to be the operations side of a business. But I did that for 6 years, grew it up, and I learned a lot. So it was my unintentional path into healthcare that's really led me to where I've been for the last 20 years. And being in the space, the things that I realized, and I recognized that between whether it's the US, Canada, UK, or any other markets, healthcare varies in terms of insurance as payers, but right, the business is never going to go away.
No.
Unfortunately, people need healthcare.
They do.
The nature of the delivery mechanisms, the payer mechanisms, those things change over time, particularly in our market here. We've seen a tremendous amount of change. but there's always that opportunity. And found that the industry in general was not always the best business practices. Um, the businesses running themselves because patients are coming in, but not being efficient, not recognizing the opportunities. So that was one thing that intrigued me about healthcare in general. What I've seen in the last several years, uh, which has been great for me as well as somebody who does a lot of acquisition work, is the industry has been fueled by private equity growth,
Mhm.
lots of investment coming in, and that drives a lot of acquisition activity. So it keeps somebody like me awfully busy. So it's for somebody who likes doing deals, whether healthcare or not, it's been a space where I've been able to stay very active and busy.
Yeah, yeah. So what has driven acquisitions and mergers in this sector? Obviously, apart from just mergers and acquisitions are a great way to grow, is there anything specific to healthcare that has meant that that has been particularly relevant?
Yeah, I think that a big part of it is that scale. As these businesses do scale or bring on other groups, just like any other business, the larger they get, the more buying power they may have, whether that's with insurance
Mhm.
payers or just even reducing their expenses on supply costs. So there's a
Yeah.
lot of factors there. And because it is a sophisticated industry at times, or it should be, I'm not saying it's always run that way. You have a tremendous amount of opportunity for, if you have the right people running a group, adding on other, less, more poorly managed groups, a lot of efficiencies there from an operation side. And, there's a lot of people in place. The healthcare is really a business about people, the patients you see, but the entire staff running the business, from nurses to medical assistants to the doctors. So there's always a lot of moving parts, and keeping people involved is a human resources nightmare at times.
Yeah, yeah. So that all has to be very carefully managed, doesn't it?
It does, and and I lived it when I had my surgery centers, and recognizing how hard it was to juggle changes in staff. It impacts the flow, impacts patient care. So it's an industry where uh, most things seems pretty straightforward if he's just going into a typical doctor's office, but on a normal given day. But there's a lot of moving parts there. There's a lot of scheduling challenges. It can be run much more sophisticatedly than many people do. I think those that figure that out have the ability to grow quickly, get more efficiencies and scale.
Yeah, amazing. So, in your time, well, over the last 20 years, because as you said, you've been doing this for a while now, you must have seen quite a lot of businesses make that transition from startup to scale up, and you must have seen some casualties along the way, I'm sure. Yeah, so what I'd really like to get into now, Michael, if that's okay, is can you tell whether a startup business is going to be successful? What are the signs, perhaps early on, that hey, wait a minute, this business has got legs?
Well, I think it's easier, and that's great. I do amazingly get to do things sometimes that aren't involved with healthcare too, and sometimes that's where I get to see some of the earlier stage businesses. I advise some businesses that maybe are tangentially related to like healthcare services, but more wellness businesses. Work with a company in the athletic recovery space. And I advised some other businesses as well, some in the tech space. And what I've seen is it's easier to pick out the ones that will definitely fail than those that will definitely succeed. But
Uh-huh.
you can certainly see the ones that have the promise for success pretty early on. And I think that comes with that entrepreneur, that early leadership team. First of all, they have to have a vision. They may be completely
Mhm.
wrong on their vision, but they have to be driven towards a path, because they have to have a vision. They have to be willing to make mistakes, and they have to be able to
Yeah.
pivot when they've made a mistake. And I think you start seeing those things pretty early on, where what was the
Yeah.
fundamental business ended up not playing out, and where they adapt or recognize another market opportunity. If you see anyone who's capable of doing that, you get pretty excited about their prospects for success. Even if they've got a
Yes.
long road ahead of them.
Yeah, that's a really, really good point, and I saw that, over the pandemic because I'm in touch with a lot of business owners, and I saw some of them close down well, when I say close down, like, retract businesses at lightning speed, and other ones sprung up that were around their area of expertise. And it's like all of a sudden, do you know what? This is amazing. You are very resourceful. You've actually made this happen almost out of nowhere. And it wasn't really out of nowhere. It was just that they possessed that ability to react very, very fast because they saw what was going on. Whereas other people, they will persist and they won't necessarily be as open to actually recognizing the signs of what's going on in their marketplace, will they?
No, I think that's absolutely a perfect example. And even for some business that I saw, for a period of time here, like do a lot in the dental space. There were dental practices were just completely shut down for about the first 3 months of COVID here, and
Yeah.
there were absolutely those doctors who I talked to just sitting on that couch at home. And then the other ones who rebuilt their corporate staff, set up centralized call centers, rebuilt their scheduling system. They went to work on the business. And so that's,
Yes.
another, they couldn't actually be driving business at that time. So they were working on the business, which, never have enough time to do. So again, another example, like you can kind of pick the budding stars out of the batch just by watching how they behave in that situation, even when they couldn't be generating revenue. So, but certainly, I've seen a company that I do advise. They're in the remote patient monitoring business, and they ended up somehow having staff able to help manage COVID testing at one school district, and now it's grown into multiple school districts. And this, what was supposed to be a short-term business, has been going on for over a year and generated a ton of opportunity for this startup company while they're still building their back end business. It's funding the growth of the business that they're trying to build. And so again,
Right.
very, I give them a lot of credit. Some very young, energetic, smart people. And then they have a guy like me around on the sidelines who weighs in once in a while. So it's kind of fun. Yeah.
Amazing, amazing. So is it partly about just in the early days, just being smart about making money? Or because I know obviously, particularly with tech businesses, it can be very much a long haul for them to actually turn a profit, can't it? So do you look for people to make money earlier on, or do you think, well, actually, do you know what? Sometimes it's just important to build that back end and put the money making requirement on the shelf for the time being.
I think it's a balance. I do think that if you're able to make money early on, that's sort of that's actually a bonus for a lot of these businesses. Even a more traditional, sort of brick and mortar business or something with a product, it's hard to operate at a profit early on unless everybody's
Hmm.
working just at sweat equity level, which I've certainly been in that boat. But I think the reality is, if one way or another, you have to have enough capital to grow the business. If you have access to capital from debt or other people investing in the business, or you're making just enough to kind of scrape by, that might be exactly what you need for the early onset of the business. Because if you get too focused on chasing profit right away, unless it's a business that's primed for it, then you're not building the real business that has actual sustainable value. Typically, if it's so easy to make money, then what's your advantage over anybody else, or what are you really building? And so I do think it takes time to figure that out for people, and if they fortunately have the wherewithal to withstand, whether it's 12 months or 24 months of little to no profit, but they have that mentality of building and a dream and a vision. I think that's what really drives it, is where are they going? You have to wake up every day with a plan. And you can be wrong, but you have to have something driving you forward.
Yeah, do you know what you just said then was actually very profound, because I think, particularly in your world, you're going to have a certain kind of perspective because you've been around a lot of private equity people, you've been around a lot of investors, you buy businesses and acquire businesses and are constantly looking for those opportunities. But from an entrepreneur's perspective, I think a lot of entrepreneurs are reluctant to look for investors or look for a financial runway because they feel as though it's not a real business unless they are in profit very, very early on. And as you said, that often puts so much pressure on the founders. The point that you made about, well, okay, if it's that easy to make money, then it doesn't make you any different from anybody else because you're not building something. that is a very, very important point, and I'd love to get into that a little bit more if that's okay with you.
Sure, absolutely. I should say, sometimes people literally fall into the right opportunity, right? And then making money is easy, but we all look
Yeah.
at those people and go, "Why couldn't have that been me?" Everyone knows that person, and like, how did they pull that off? And sometimes it's dumb luck. Other times it's fortuitous planning. Usually it's the right relationships, right? I think that's usually the people who just fall into money. It seems they just can have the right connection at the right place and right time. But otherwise, yeah, I think it takes time and a lot of energy, and maybe more energy than time to build the right business.
Yeah, and businesses, would you agree that businesses that are profitable early on, they run the risk also of being a bit commoditized because if it, as you said, if it's easy to make money, then of course everybody's going to recognize that opportunity. They're going to pile on in. And then what's going to happen very early is that there's going to be a saturation and there's going to be a lot of competition because there'll be a lot of people doing the same thing. Would you say that that is something that you've seen?
Yeah, it is, and I do think even those businesses so I see that are smart, where even if they are making some money, right, all that money is flowing right back into the business because how can we be better? So, I'd say even those that are fortunate enough
Yeah.
to make some money, they're spending it as fast as almost as fast as it's coming in, typically, just to whether if they're building on a technology or building out a business plan or ultimately built adding resources in whether in human form or equipment or other to set them up for future success. So that's again fortunate to have some revenue coming in to be doing that. But I do think that it's rare that I see a business that's just out of the gates brilliant idea comes to fruition and they're off and running and making tons of money. I've friends who, the overnight successes who've been in there working on a project for 8 years before suddenly everyone thinks they just showed up. Yeah. I know
Well,
many more of
exactly,
those.
exactly. Nothing worth having comes easy, right?
Exactly right. I think that's
Yeah. So yeah, yeah. So in terms of investment and actually seeking investment, do you have any tips to any of the entrepreneurs who are listening to the show about how to actually raise investment or raise capital in order to fund growth?
yeah, and there are different ways to go about it. And I think certainly the type of business you're in makes a difference. The size of your business certainly does as well. Whether you want to take in other people's money as investors in the business, and I think there's that can make a lot of sense, depending on the type of investor and your business. But if there's access to debt capital loans, small business loans, certainly, I think that people should look at and take advantage of those opportunities you know, up front to see if there's easier ways to access at least some capital to give them some room to begin scaling the business and not giving up the piece of the value of what they're building. But they're but at times you have got to bring in that outside capital, and I think that in doing so, before approaching anyone, whether it's a bank lender or somebody as a potential investor, I think it's critical to really plan. And I think that takes time and energy. And that if you want to raise capital, you should start planning today. You should have been planning at least 6 months ago. And I think
Yeah.
how you present yourself, how you present yourself from an investment deck or a business plan perspective, how you're not thinking about the future of the business, being able to put that forth is critical as opposed to just walking in with, here's my updated financials. That doesn't really get you very far. And if you don't have that vision laid out well, it's a challenge. But I think those that spend the time I would say it's like you could have all the right information, but you got to wrap it up and put a bow on it. And I think if you're able to do that, you have to present it properly. That's where you're going to get the most bang for your buck and the most valuable value for your business.
Yeah, so that's a really important point. So really, it is not just about building a competitive differential, but it's also about packaging up yourself really and your team, and you're showing that you have a clear vision that is presumably going to be exciting to investors, because investors they want to have fun, don't they? I mean, that's also important, isn't it? They want to feel good along the way, don't they,
Yeah,
about what they've done?
having friends who are in private equity. They love to tell you about their favorite management teams. They love to tell you about the success stories as much. The business that went from nothing to something, and they were the ones who understood it and believed in it. But it all started with, there had to be a connection. There has to be a personal connection, because I've also seen
Yes.
plenty of people who would have happily written a check for the business based upon its financials, and just didn't believe enough in the founders of the business themselves and the way they presented themselves, where, great, they've grown a business to this point, I don't believe they're the right person to grow it to the next level. And so then that
Aha.
becomes a challenge. Like, why would they write a check if they don't believe in you? So you have to really
Aha.
understand why you're passionate about it. You're going to take You're going to get tough questions when you're raising capital. You're going to make mistakes. People,
Yeah.
and lots of people will say no. The reality is most people will say no, but you can only marry one person at a time. So you only have to get one investor
Yes.
at a time. If you get more than that who are interested, that's fantastic. But you can't be deterred by somebody saying no to you. And actually, you don't want to force somebody to believe in you. If they authentically believe in you, they've got your back, and you can really go a long way with somebody who's the right growth partner. And I think it's important to just understand that
Yeah.
it might sound like the greatest. I see all the time where people like want to be tied to a certain private equity group or a venture capital group as they're younger and starting up, because it's the right name. But it's not the right. If it's the wrong fit, it doesn't matter. You're not going to succeed with the right name if you don't get along with that group, or they're going to they're going to be in your business, and so you want to make sure you like working with them.
Oh, that's just so important. I think this, again, so much wisdom in what you've just said, because people buy people, people grow with other people. We're all connected, right? And so we're going to be stronger. We're going to be more successful if we're surrounded by people who lift us higher, and those are people who we believe in and who believe in us. So I know it's just so important, isn't it?
I think it's all those things that you're supposed to remember as a parent talking to your kids. It's actually
Yeah.
life, setting you up for life, right? Remember these guiding principles.
Yes.
It's the golden rule, and treat others you like them to treat you. And it's find those people that they do, like you said, they elevate you, they bring you up. You should inspire them, that they believe in you and what you're building as a business, but you should be inspired what they bring to you. It's You want you want their money, but you want their insight, you want their knowledge, you want them to support you and guide you when you've gone down the wrong path for one reason or another.
Yeah.
And
Yeah.
and that you're both in it together, and you're not deterred, and you're going to keep moving forward. So it's really critical just to keep working through each of those pieces, and having something you believe in.
Yeah. Yeah. So, do you have a particular story of a startup to scale up that you could maybe share with us, so that we can have a practical, real life
I
example
do.
from
It
your
could be one from
history?
my current life, actually, which I think is fun.
Yeah.
And it's actually it's starts in the UK, as a matter of fact. So yeah, there's a company that developed a product. It's called the Gecko. It's in the medical space. It's for edema, deep vein thrombosis after surgery, to keep from swelling or blood clotting after surgery. It's a disposable device worn. The founders of the company built this and recognized that the technology had other applications into the athletic space, for athletic recovery, recovering the bodies, the legs, after intense workouts. A friend of mine who's in the medical space here in the U.S. saw the Gecko, that medical product, several years ago now, 5, 6 years ago, and got very intrigued by it. Wanted to start seeing if he could introduce the product to orthopedic surgeons and other people he knew here in the U.S. And in that process, became aware of the product for the athletic recovery space called the Firefly. And the word was, you can try to sell that product, but no, we don't see necessarily know how that market will play out for it. But the Gecko, they believed in. The Firefly was like, it's a great similar product, but how do you find market share? But he had a belief in both products, but was very intrigued about the athletic recovery
Hmm.
space. And um, I think there were like zero sales to speak of here in the U.S. 5 years ago, and then started making a couple of relationships with some major that he had already with major college sport teams here in the U.S. and a couple of professional teams here in Los Angeles. And little by little has grown that business to the point now. Well, I started helping getting involved from an advisory standpoint a couple of years ago. Somebody I've known for 8 years to watch the business get to that point. There's almost 200 teams in college and pro using it now, and
Wow.
now it's growing. And now he's actually selling back over to into the Europe now. So it's figured out the recovery space to the point where now beginning this now actually leading sales into the back to the UK. So from UK to US back to UK, and now the sales are being handled from our my longtime friend here in the US, and it's been really fun to see where it's gone so far and where it's going to go. And really, it was he believed in a product, saw an opportunity, had to keep grinding for a long time, and sort of start building
Yeah.
awareness, but building credibility. And it really stems from that relationship between the parent company in England and the the founder here in the U.S. and working together and starting with a handshake and kind of growing beyond the handshake, but building trust and supporting it to see it to where it's gone today, and now looking at opportunities in other parts of the globe and continue to grow. And we see every day more and more athletes talking about Firefly on Instagram and other social media. It's just but it was a grind, and it's taken just a steadfast belief and making a lot of mistakes along the way, and then watching and growing with the product. So it's been fun to be playing a small part in that success.
Oh, that's a fantastic story. Thank you so much for sharing that, Michael. Now, you mentioned mistakes along the way. So, of course, all entrepreneurs make mistakes. It's how we learn, right? We fail forward. So, can you share maybe a couple of those mistakes that were perhaps setbacks at the time, just so that we can learn from them?
Well, I think sometimes it's I'll speak specifically to Fireflies. I was just talking about is thinking that you're ready for, it's a great product. It wasn't an intuitive product. So, but believing like everybody who's an athlete or even a weekend warrior should use this product, and trying to go down paths with consumers before the product was ready, or um, and really trying to continue building into segments in various sports here where it just made sense, but kind of hitting walls. There was a big focus on the volleyball community here in California because of my partner's, his a lot of his connections, but recognizing that market
Hmm.
to get mass adoption is different than, uh, you know, um, maybe there's some people who would like the product, but are people going to use this product day in and day out and buy more of it? And it was just about a year ago so that we really started refocusing on the running community, recognizing as somebody, I was a failed marathon runner. I'm not built for running, but I did a couple of those, and that I did anything you told me to do to get through my training to run the race, from acupuncture to tons of physical therapy, whatever it would take to get me to run it, I would do it. And realizing that's the mentality of an active runner, even if they're just doing 5Ks and 10Ks. And as soon as sort of pivoted from focusing on one consumer segment to another, it was just like night and day difference in what just when going from very little consumer sales
Wow.
to quickly growing consumer sales, and then now expanding that into triathletes. And and you start going down the line of those that are going to do whatever it takes to keep training. And so you can see these clear benefits, but you can't be everywhere at all at once, right? That's I think one of the big problems. If you think you have something great and everybody would benefit from it, you can't
Yeah.
market to everybody. Not when you're young. Maybe
No.
5 years from now, maybe you can when you've really built up a lot of success, but and you have basically the money in the bank. But early on, you have to pick your markets and you have to pick them wisely. And because if you don't, you can spend all your dollars and barely reach any of the people that are definitely going to buy. And so I think it is important to be focused. And again, went into volleyball. It wasn't a mistake. It just wasn't the biggest bang for the buck market. So I've kind of retreated and put money and focus towards running, and have seen the benefits from it. So I think it's okay to have a plan and realize wrong segment for us now. Let's go where we're going to get the biggest traction and get the biggest benefit.
Yeah, that's fascinating. And it also goes back to what we were talking about earlier on, right? About pivoting and about actually taking feedback, because you took they took the feedback, didn't they? That although they thought this product would work in the volleyball market, the volleyball market was actually saying, "Yeah, no."
Yeah,
Um,
yeah, just know how to create the
so
right awareness there. I think it was more like how much time and
yeah,
energy to convince that world, and it's and I think no matter what, right, all ages can get out and put on shoes and go run down the street. So it's a pretty big. It turns out it's also a really big market, but a very dedicated market. So no, it's just
mm,
it, smart people can make some bad decisions, and but smart people also can learn from, like you said, learn from your fail forward, and I think that's very true. And I said
yeah,
I know you learn more from failing, and I often say I'm sick of learning because I don't want to keep failing at things, but it is part of the
yeah.
process. It is definitely part of the process.
Yeah. So let's talk about other aspects of growth, because we've talked about investment, we've talked about pivoting, we've talked about failing forward. What are the things that entrepreneurs have to put in place to actually start to grow solidly from a foundation of that early stage ideas, and just bootstrapping and getting things up and
Well, I
running?
think first, and I know that every entrepreneur has to wear more hats than they want to. That's just the nature of starting up a business. But I think it's important to identify, you may not know it on day one, but as you're working down your path of what you enjoy doing, what you hate doing, what you're
Hmm.
great at, and what you're terrible at. And you might be great at something that you hate doing, and you're going to have to probably keep doing that for a while, unless till you find a suitable replacement. But I think it's important to understand what motivates you, what you want to do, and what you're great at. Again, I think that businesses,
Hmm.
when it's a company of one, it's hard to delegate very much. As you start bringing in people, I think it's important to recognize how to play to you want to play to your strengths and play to the strengths of those you hire. And
Yeah.
I think one of the biggest mistakes I see in almost every company I've ever encountered is a task comes up and they just assign it to, here, Jane, this is your problem. And it's like, I would have maybe loved tackling that problem. It would have been great for me. I liked it, but it gets given to you, and you don't. It's just like, I don't even want to go anywhere near this. So people not understanding the strengths of their team and their weaknesses. You can build people, like, right.
Uh-huh.
People may say, I don't know
Hmm.
how to do this, but I'd love it. You can. That's an opportunity, but just giving tasks and responsibilities to the wrong people at the wrong time, you can crush a business, and certainly all you're doing is creating headaches for yourself. Um, or what I think becomes my own personal nightmare that I've done to myself is I've given something to the wrong person, so I just take it back, and next thing I know, I haven't delegated anything. It's just like I just kind of keep on doing more work than I should be. So if you're going to grow, you need to learn how to delegate. You need to not just not just giving somebody roles, but giving the right roles to the right people, and giving them the right knowledge and experience
Hmm.
to grow into their opportunities. And that's how I think you find superstars in a company as you grow. Um, you got to challenge people.
Yeah.
If people are not up for a challenge, they're probably not the best person to be in a growth company, an early stage to next stage growth company. Life should be a little bit. Every day should be like, how are we going to solve this problem a little bit? And but I do think that's a key failing of a lot of people is just understanding their own strengths and weaknesses and that of their team.
Yeah, and I think it's only too easy to make assumptions about people, and I've caught myself doing that. And we think we know somebody, and we think we know what they're good at, and we think we know what they want, and all of these things because we think we know those people. But in fact, we're just always telling ourselves stories, right? So we'll tell ourselves stories about a person, and if we're not actually asking them or really checking in with them, then sometimes we can miss stuff, can't we? So do you think how important is it to actually engage with your employees or your fellow directors or whoever to actually find out really what they're good at and
Oh, I
really
think
what they
I think
want?
it's essential. I mean, ultimately, you have to make decisions, right? So sometimes the decision isn't always a popular one. So I get that it's not everybody has to be
Yeah,
thrilled about the decisions you make as the business leader. But I think that if you're coming from the right place and if you treat your people, everybody with respect, and there's sort of a appreciation of how you conduct yourself, I think also the team is more acceptable of those types of being handed a task that necessarily wasn't their dream task, because that's also it. There can be something uh, maybe nobody wants the task, so that's the reality. You can't necessarily give something that everybody wants to have happen. There's really a lot of work in the business, but I do think understanding your people in and out of the office. I know everyone has different views. You know, some people don't want to ever see anybody outside of work, but I do think those team bondings, whether it's dinner or going out and doing something outside of the office, I think people learn a lot and build relationships. But it is. I think the leaders that I've always been impressed with when in the office are the ones they do ask a lot of questions and they probe the team. They're making the decisions, but they're engaging with the people who are living with the problems or and the opportunities, and getting their sense for things. And so I think, yeah, I think a
yeah.
good leader is a good listener too, but ultimately somebody who's comfortable making a decision which may not always be the most popular one.
Yeah, yeah. I was just thinking one of my mentors told a good story about a lady that was working for him, and he kept on giving her pay rises because he liked her, but he sensed that she wasn't really happy, so he kept on giving her more money because he say, you're doing such a great job. I want to reward you, and this lady, she'd go around looking a little bit miserable, a little bit kind of upset all the time. And he thought, well, what is it? Why I keep on giving her more money? And why is she walking around with a long face? And then one day he sat down and he said to her, look, is there something wrong? You're walking around looking a bit miserable. And she said, well, I've got this favorite class that I love to go to at the gym on a Friday afternoon, and I'm always missing it. And she said, it's just my favorite class, and I would just love to have Friday afternoons off so that I could go to this class and really enjoy it. And he was like, do you know what? I've never actually asked her what mattered to her. If I'd given her that instead of the pay rise, she probably would have been really happy and been walking around with a big beam on her face because she found the perfect company who was willing to support her passion. So it's funny, isn't it, that we just never know,
Yeah, I
do
think
we,
that's
unless
very
we
true.
ask?
You can go a lot. Yeah, people get motivated in very different ways, and whether it's financial incentives or otherwise, I do think that finding that sweet spot. I've lived that too. Not like we got it wrong, but I just recall at my surgery center years ago, to these surgery centers, we had the people scheduling our cases. Uh, and managing 40 different doctors trying to schedule surgeries is a bit of artwork at times, even though they had set schedules. But our
Yeah,
schedule, they had a base salary, but we also gave them a bonus. It sounds like nothing, of $1 per case scheduled in the month. That doesn't, every time I schedule a case, I get $1. It doesn't really, it's not really that doesn't, to me, like, why would that motivate me? But we were doing 600 to 800 cases a month.
yeah,
So so now they're making $600 to $800 a month in bonus for scheduling these cases, which that starts to sound better. But if we have 599 cases scheduled and one more doctor is trying to get a case on it the last day of the month, it's really only making them an extra dollar. But it's amazing with the mentality shift of they're looking at the cumulative whole, and it became competitive. If I made 600 last month, I want to make 601 this month. And so this little dollar incentive, so it was a
yeah,
financial incentive, but this one little dollar, I remember we had this one scholar, she would she'd call 4 doctors' offices, all these patients, just to squeeze one more case into a schedule because she was going to hit a bigger number, and always looking in the aggregate. And every time she did that, I was like, this is amazing because we're making quite a bit more money for that surgery coming to our surgery center. But she made $1 for it, and she would work tirelessly to make that happen. But I also think it was just it was about the money, but it was also just about the just sort of being competitive against herself and finding something that motivated her every day, and getting a doctor to appreciate that she made that happen. And you just so even if you have financial incentives, we could have given her a higher base salary, but it turned out just giving her $1 more per case changed the way changed the way she worked. And so you do kind of how you
Yeah.
incentivize people, financial or other. I agree. You should be paying attention to what's working and what's not, and not be afraid to change it.
And people love growth, don't they? They love growth, they love challenge. It's important for all of us to have something to work towards. And if we don't have that in our lives, then our lives feel a little bit empty, I think. So, to provide a structure like that, well, as you said,
Yeah, we're
it
fortunate,
worked,
and I
didn't
do think that
it?
made me think of something else. I do think it's important, or I think it's really maybe I'll say important, maybe essential. Is it's one thing to have the business growing and the teams, even if they're doing well financially. I think it's really, really important that the people understand the why. Why are we doing this? Why are we making this change? Um, it's having some sense for the direction of the business and feeling like they're part of that business. People do, even if they're not getting financial rewards from some business growth, they want, like I said, want to be a part of the growth. They want to be part of the success story. And if they understand why we're going in a different direction, or why we're being asked to do something, I think giving context to anybody on a small project or in a big corporate level is really essential. Other than here's your task, get it done. If people understand why they're doing it, I think it goes a long way to getting better product, better results, and more team engagement. I think that's all about culture building. Is feeling like a part of the bigger success.
Yeah, I love that. I really do. So, just to loop back to what you were saying a few minutes ago about tough decisions as well, and about unpopular decisions, because that's also very much a part of being a leader and actually steering the ship, if you like, in the right direction. So, any advice or tips in that respect,
I think it's be
Michael?
thoughtful. Number one is if you're going to make an unpopular decision, make sure you have a pretty good understanding of why you want to make it. And that could be from changing some direction of the business. It could be and I think often it's letting go of somebody on the team. That happens as well. And you could have somebody who is has checks all the right boxes on paper and maybe is actually successful in their job, but they could be impeding the success of others. I've had people who are sort of the bad apple in the bunch, where they were really doing a good job, but they actually brought other people down. So I had to get rid of some qualified people over the years, just because they didn't make the team better. They only made themselves better, and it was really it sort of set the whole team back. Um,
Mhm.
so so sometimes those are
Yeah.
without context can be, you know, other people. So there's times where everyone's thrilled that somebody goes, but there's other times that people aren't really seeing where the business is going, or somebody might be great, but they may not be great for that business or where the business is at today. They're great for the business that you had 2 years ago, but they can't either grow with it, or you've pivoted and they're not the right person there. And I think it's important to help those people onto their next phase if you like them, which I've had that happen as well. But there are other times where it's just, I can't 2 years down the road, I can't see this person in this business and making those changes. And so it is something where and you don't have to fully explain yourself to your staff all the time. I mean, I think I don't want to sit there and say everything has to be an open book, but I do think that people have to trust that you're being thoughtful about it, and really how you conduct yourself, even certainly, you never, as you're, if you're leaving a job, you never want to burn bridges as you're leaving. But I think as a leader, you also don't want to set that precedent uh, of doing or
Yeah.
saying anything that reflects poorly on somebody else, whether you got rid of them or not, or reflects poorly on the business, because that is a culture killer all the time. People don't like to work in that environment where they feel like a hostile work environment. They want to feel appreciated even when it doesn't work out.
Yeah, and they want to feel as though leaders are fair, and that actually it's very important for leaders to get rid of the bad apples, because that is not good for anybody else in the organization. So it's a bit like being a good parent in a way. If you're a good parent, you don't tolerate bad behavior, but you deal with it in a perhaps a gentle way. You don't start screaming and shouting and hitting people. So in a way, a good leader, they're
I think they
firm
should
but
be.
fair, aren't
I
they?
think every now and then, sometimes you can fail and make it and still succeed, but in those regards. But
Yeah,
but I think by and large, I
yeah,
think I've worked for some very tough people over the years, but I thought they were, but also from a
yeah,
business standpoint, I thought they were very fair. And the thing that I've had to remind myself of at times, whether I've been on the good end or the bad end of the conversation, is it's business. It's not personal.
yeah,
And but if you're an entrepreneur, it all
yeah,
feels like the same thing, because the business is very personal to you. Um, but you hope as the business
yeah.
grows that the team or the people that work with you recognize the decisions you're making should be to drive the business forward, and not for personal agendas.
Exactly, exactly. Well, what an incredible conversation we've had today, Michael. It's been absolutely fascinating to hear your perspective and your story. And thank you so much for coming on the podcast and sharing all of that with our viewers and listeners. So thank you very, very much. And yeah, look forward to hearing and seeing more from you soon.
Well, thanks so much. This has really been a